Lion's Share podcast with our host, Ed Lyon. Ed, I'm excited about our guest today. You've been talking him up a lot, and you always have interesting people that I don't know where you find them, Ed.
Well, I'm not sure they all want to be found, but working in the tax industry connects me with people across the country and people in all sorts of positions with all sorts of backgrounds. So that's why I'm excited today for my guest, David Tuck, who is an accountant in Oregon. You would think that accountants don't have a lot to do in Oregon because they're such lefties that they want to pay taxes, right? Not the case. But David is the first former IRS auditor who has been on the Lion's Share podcast. So I'm excited to have a conversation today about how you start out working for the IRS, move over to what some in the IRS would joke is the dark side, but how that experience shapes how you work with clients today. So, David, welcome aboard. Great to have you here. Why don't you talk a little bit about your background first so that we can have a foundation for understanding your perspective?
Yeah, perfect. Thanks for having me on, Ed. This is exciting. And Neil, I'm excited to be a part of this as well. So, my roots go back to Western Africa, Nigeria, actually. My parents were missionaries. They did crop economic development work. And so they were helping people. And I grew up in Sherman County, the rolling wheat fields of Oregon, and it was agriculture. People growing wheat and barley and cattle ranching and whatnot. And I did 4-H and had hogs and bunnies and all these types of animals and stuff growing up. And I loved entrepreneurship. My friends, they had ATVs and they had boats and they had trucks and all this other stuff. And those were business expenses from their parents. They were able to write off all these toys, and I got to benefit. I got to ride around, and I was driving a wheat truck and a semi when I was 14 years old, and just, getting back to the roots. Right? Our country is built upon agrarian culture. Our country is built upon small business.
Absolutely. Business. Let's go all the way back to Thomas Jefferson, who envisioned the nation as a population of farmer entrepreneurs.
Absolutely. So entrepreneurship is the lifeblood of this country. And there's so many tax deductions, so many benefits for the entrepreneur and investor. And so we go up the chain of business owner, entrepreneur, investor, and there's so many more tax deductions. And when I was in college, I got hooked on a guy named Warren Buffett, right? And he said,
Smart guy, that Warren Buffett.
Smart guy. He said the language of business is accounting.
Yeah.
And I was like, what? So as my colleagues were graduating with other degrees, their employers were making them go back and get more accounting. I was like, why don't I just get an accounting degree? So I did. I graduated. I went to work for the Idaho Tax Commission, then went to work for the IRS as an auditor. And I was wanting to go in to learn because I felt like as a master's degree, I felt like they were going to educate me. And it was so interesting because there were so many people in the orientation, in the initiation. The first week they said, forget everything that you learned. We're going to teach you what you need to know. There was people there that were in business for 20 some years and they were partners in big tax firms and CPAs, and some of them had judicial doctorates, and they were offended, and some people just left. They're like, you can't tell me. I know all this stuff. I got a master's. I got a PhD. I've got all this experience. But I was young and green. I was like, what do I know? So I learned a lot. And there's a difference between the Internal Revenue Code, which we all know, and the Internal Revenue Manual. And so the Internal Revenue Manual, which is IRM instead of IRC for code, I call that Martian. And so we have to
tell us exactly what the Internal Revenue Manual is, who it's for, and who lives and dies by it.
Absolutely. And that's a great topic. So the Internal Revenue Manual is the playbook, the procedures that the employees have to follow in case development, in collections, in all these things. So it's written down. So it's a procedures. It's an operating procedure, standard operating procedure.
Not only that, but it's public.
It's public, absolutely.
It's public information. It's like going into a football bowl game and getting a look at your opponent's playbook.
Absolutely. And it's sad because so many of the employees that work at the Internal Revenue Service have been a little bit trained on the IRM, but maybe they forget, they don't reference it. Maybe, they're referencing part of it, but sometimes they skip steps. And so if we know as practitioners that exists and that's a reference, and when the IRS audit or collections get out of step, we can say, hold on, you violated your own policies. You violated your own SOPs here. You're going too far. And what's scary is the AI, as AI is coming and doing more of the heavy lifting, is will it skip IRM procedures? As we know, the AI sometimes will hallucinate. It will drift. Drift is a big thing. It goes off course. And it's like, wait, you got to get back on course. And so drift happens everywhere in humans and in AI. And we have to have those guardrails. We have to understand saying, you're drifting here. We need to get you back on. So how do we know when the IRS is adrift? If we don't know that A, the IRM even exists, and B, how to reference it, how to know it enough, right? We don't have to know every detail, but we have to know enough to say, hey, auditor or AI, LLM, you're off course.
Right. LLM, large language manual. So how long were you at the IRS? Give us a quick overview and some highlights of your career there in the belly of the beast when you were working on the bridge of the Death Star.
I've had years of therapy, Ed, and I think I can handle this conversation now.
Good.
It was not the best place to win friends and influencing people. When I was single, right? I was in college. I was trying to date. And when people were like, what do you do for work? And when I would say the truth and like, I'm an auditor at the IRS, they're like, see you later. I don't want anything to do.
Right. It's like telling people to sell life insurance for a living.
So getting a date was a little bit hard. So I had to be, creative when on the dating apps and all that stuff, and just, not to fudge, but also not to let them get to know me before they get freaked out.
Right.
But anyway,
right.
so
you could start out by saying, I work for the Treasury. Maybe that's a third date conversation. Okay, your Uncle Saul, by the way, what was he thinking?
Exactly. So yeah, I spent 6 years there, and I had enough. I just couldn't take it anymore. It was just too much bureaucracy. And I'm glad auditors exist. I'm glad that there's a place for it. There needs to be safeguards. People do go to jail. They break the law. We need that enforcement to make it fair. We also need to understand how to maneuver it so we can use it to our advantage.
Right.
So,
and Neil and I have talked on previous episodes of the Lion Share podcast. It really is important to understand that a lot of the enforcement mechanism, it's not there for show, but it's there so that people know it's there, even though most people are never going to come into contact with the IRS Criminal Investigation Unit. That over the last 5 years, the IRS has initiated barely over 1,000 prosecution referrals to the Justice Department. And they're very careful. They build their cases carefully, brick by brick, so that if you do get prosecuted by the IRS, you can safely assume that your goose is cooked. It's well over 90% of those cases that the IRS wins. But in the past 5 years, so we look at over 1,000 prosecutions. That might sound like a lot, but that's in a period of time when the IRS received 1.2 billion tax returns. So it's there, but it's a scare. It's sort of like telling your kids in November that Santa's elves are watching.
right.
I just came up with that analogy. I'm going to have to remember that and work on it, because mostly the elves don't leave lumps of coal in the kids' stocking. So that's part of it, but people do need to understand that most of the enforcement is done far short of anything resembling a criminal investigation.
Right. They're the guys who are like, we got Al Capone. Nobody could get Al Capone. Well, that's a big player, right? Those are big players. So they're going after mafia and cartel and stuff like that.
Right, the terrorist financing, that sort of stuff. Here in Cincinnati, we still resent the IRS for putting Pete Rose in jail. And
Right.
we're happy to declare that he belongs in the Hall of Fame. So you'd had what the dissatisfaction. So it sounds like the dissatisfaction wasn't the role that you were playing in the tax system. It was the constraints on the role, the bureaucracy and the red tape. Did you feel that you were genuinely useful in enforcing the Internal Revenue Code, or did you feel that they were sending you out to fight with one hand tied behind your back with red tape?
Yeah, I guess that's a tricky question and tricky response because it was low-hanging fruit, right? The low-hanging fruit, the easy stuff. I remember wanting to go get subpoenas and summons people's bank accounts, and I was like about ready to. I had the paper, gonna go talk to the judge and whatever, and my manager's like, "No, you're not gonna do that," but because it was too much work, we had to do more of the easier stuff, low-hanging fruit, and it's hard. And the people who have the $500 an hour CPAs and accountants and attorneys bury the IRS with paperwork, right? And I say, how do you win an audit? It's the thunk of physical paper or electronic digital documentation being organized. And it's not that tough. The IRS is using AI. We use AI too to help us to stay organized, to help us stay focused, to be ready. Audits are just a checks and balances. It's just a speed bump in preparing for that audit and just we're ready. It's just any type of due diligence. There's death, disability, divorce, disagreement, IRS, who cares? We're ready for it, right? I mean, employee theft and all these other things those are all due diligence requirements. Okay. So if we just have those checklists and we're just going through those checklists, we've documented, mistakes happen here or there. But really what chapped my hide was the letter of the law versus the spirit of the law.
Okay.
I was more of the spirit of the law type of guy versus the letter of the law. And you got to document everything. And that's where I think AI is going to be more of the letter of the law versus the spirit. And it's like, well, it's subjective, right? If you give 10 tax cases to 10 different preparers, you can get 10 different responses. If you give that one set of facts to 10 different auditors, why? Because people have bias. Well, bias is not bad, right? It's what Daniel Kahneman talks about. It's just what's going on under the surface. But
everybody has a bias.
Right. The thing is this that chaps me is humans program AI, and AI is learning from humans. So if the humans have bias, then AI is going to also have bias. And there's been big cases documented by universities and all these accountant firms and stuff about the different bias that the IRS has, and it's sad. It's really sad.
Right. Does the IRS have its own proprietary AI programming, or are they starting with a base of like a commercial program like ChatGPT and customizing it? I just finished a new novel over the weekend by Michael Connolly. He's the author of the Lincoln Lawyer series on. And the case involves an AI chatbot that convinced a teenage boy to murder his girlfriend. And I don't want to get into the specifics, but the biases of the programmers ended up playing a key role in the resolution of the novel. So you're absolutely right. So everybody has a bias. Tell us what you know about the IRS's bias.
Well, so there's, again, with the large language models, LLMs, you have links to outside LLMs. Like ChatGPT, you can plug it into programs. So there's certain software, you might have your own LLM, but you disconnect the link so there's no third-party access. There's no outside, so there's controls. So we set up those controls to keep the analysis, the AI within that confined environment and not be able to have leaks and data security and stuff. So the IRS doesn't use ChatGPT because there's no filters. There's no security. It's there's all these things. So they're not using chat. They're using other AI tools that they're inventing and that they're coming up. But the whole point is they're looking for obscurities. They're looking for behavior bloops, right? So
Right. They're looking for irregularities. And what the AI does well is pattern recognition. It knows what it knows what a tax return should look like because that's the pattern. So
It could basically look at it, put it together. That's the power of it. And there you go. I mean, you could literally go and put in something from TurboTax or certain things, throw it in AI, and AI probably have a better evaluation than TurboTax would.
because TurboTax is a dumb system. It's not intending to be intelligent. Again, I'm going to throw out a pop culture reference. In the movie The Accountant 2, Ben Affleck's character is an autistic accountant who can look at some income statements and immediately determine that money laundering is going on, that the financial statements are reflecting greater income than the business is actually learning. AI is it's just an automated auditor with a touch of the tism.
Yeah, and the way I look at it, it's when coding started happening and they had those cards and humans were feeding in cards and they were doing this the punching of the cards and stuff, and then it just continued to move up. So AI is just making everything faster. It's just connecting things and it's asking questions and solving problems, and it's making those connections so much faster, and then humans don't need to be involved as much. And so these, like a CP 2000 notice, which is a notice if there's an irregularity. So there's a 1099 or a W-2 that was filed and somebody files a tax return, there's a mismatch. And so that's what a CP 2000 notice goes out. Well, those types of things are now going to be enhanced and a lot faster. Instead of waiting 9 months, 18 months for those notices go out, it's going to go out a lot quicker because of the processing power and the speed behind it. Now, again, it's going to take a lot.
That sounds like a net plus for the taxpayer, though, because
Sure.
the issues will be resolved faster. If a notice comes out in 2 months instead of 12 months, the taxpayer is going to remember it better and be able to solve the problem maybe with 2 months of interest instead of 12 months of interest. That becomes an issue.
Absolutely. And so, they're looking for the large, unusual, questionable, LUQs, the bloops, right? So that's an acronym. It's a term that the IRS has, large, unusual, questionable, LUQs. So it's the irregularities. So I talk about if you have like a motto, something on the wall, it says, like, just do it, or, whatever, have fun. And there's a period. And it makes sense in that sentence or explanation point. But what if there's just an explanation point or a period and no words? That's weird, right? Why is there just a red dot in the middle of the wall? So that's the obscurities. And Ed, I remember you teaching this a long, long time ago, probably 15 years ago. You said, hey, auditors, it's like buying a house, right? You're giving this example because your former spouses were realtors, and you're saying auditors, people buy houses on the street and they go into inspection. Well, same thing with IRS. They audit on the street and they go into inspect to look for the large, unusual, questionable. They expand or contract the scope of the audit. So as a human, we can also look and say, that's creating a large, unusual, and questionable. Often what happens in bookkeeping is people break out the books and records and these different expense items, and the accountant just lumps them all together and creates a large, unusual, questionable.
Right. As I would tell, when I was doing tax returns for clients 20 years ago, I would say there is no category called miscellaneous.
Exactly.
Yeah.
So breaking things out into smaller categories, documenting and putting schedules, attaching stuff.
Yeah.
Avoiding those large, unusual, questionable. And that's what AI is going to be looking at. They're looking at now behavior LUQs. So behavior LUQs could be like, hey, you refinanced your house, and now we see there's a rental property, but where's that 10T election? And most accountants are like, I don't know what a 10T election is. Is that no, it's, you have to document with the tax return that you took that money from your personal and you are now using it over there. Without the election, you lose the expense. And most people have no idea what a 10T, and there's so many little elections like that, that's the devil's in the details. And it's sad because all these audits are going to go out, these notices, and like basically prove it. If you can't prove it, you lose it.
Right. So the one place in the government where you are presumed guilty until proven innocent.
So do you see a lot of audits coming with AI?
Yes.
I'm curious because that was the next direction I wanted to go in. So we're seeing two very important developments just within the last year. One, we're seeing AI become more and more influential and be incorporated into the IRS. Yet at the same time, we have Doge essentially kneecapping the IRS with personnel cuts and then the government shutdown, making things even worse temporarily, of course. But we now have about a third of the staff working at the IRS that we did at the beginning of the year. So as a former auditor and someone who still does resolution work with the IRS, what do you see happening to audit rates? Where do you see audits concentrated? Do you think we're going to see new types of businesses targeted? What do you see as the near-term future of the IRS audit?
Well, so one thing is for those people who live in states like Oregon who have an income tax, they're not in shutdown. They're auditing.
Right.
And so the states audit, and then you have to amend the feds. And it goes back and forth. So the states are like, hey, we're going to lose a lot of money here. We better ramp up our audits. Because the IRS audits bring in about $87 billion with a B. That's a lot of money. And the Treasury, the Congress wants that money.
Yeah,
and if
they sure are desperate for it.
If they're short another $87 billion, there's going to be a problem.
Right.
So there's a gap. And with technology and looking at, we have a tax gap. This is what some statisticians think that if everybody paid their taxes, this is how much the money would be coming into the Treasury. And I know that you've written a lot about the negative tax gap.
The reverse tax gap, yeah.
The reverse gap. And that's true. I think that's very true. There's a lot of people that are overpaying their taxes that are unintentionally, and they just don't know because of ignorance.
Right.
And that's
they don't know how porous the tax code really is and how much a good plan can accomplish for them. So you've got the tax gap, which is people not paying what they owe under the law. You have the reverse tax gap, which is people paying more than they necessarily owe under the law. I would imagine that the actual tax gap is bigger than the reverse tax gap, but the numbers are substantial in both directions. And that leads into my next question for you, which is when you left the IRS and opened up your own practice, were you looking specifically to do planning to combat the reverse tax gap? Did you have an idea of what you wanted to do, or did you just know that you loved taxes and you wanted to work in an entrepreneurial environment for yourself?
Yeah, and it is interesting because as Sandy Bakken, right, who has influenced both of us, he talked about, kind of paraphrasing, the 6 most expensive words are, my accountant takes care of it. My accountant takes care of it. Not out of deceit or that they're trying to do anything bad. They don't know. They're so busy with compliance. They're so busy with trying to keep up and fill out the right forms in the right line and then calling it a day. And they're fried. They're tired.
Right. Their brains are fried. An accountant who's doing 400 returns in a year is doing a lot of work. And by the time they're done putting the right numbers in the right boxes on the right forms, they either don't have the time or the technical training or the proactive inclination to help clients pay less.
Right.
And that's what I see, Neil, as a planner. The clients I sit down with, the first question I ask them is, when's the last time your tax pro came to you with an idea to save money? And most of them say no. Some of them fall out of their chair laughing, and some of them say, it feels like my CPA works for the IRS. So that's the gap in the market that I've spent 20 years trying to fill, and with students like David. And David, I know that you are a student of, you're a lover of learning. You're a student of tax. You're a certified tax coach. You're a certified Main Street tax professional. You're constantly learning new strategies and new approaches towards tax planning and also towards building your own business. Did you start on day one as an entrepreneur? Did you have planning in mind, or did you just say, I want to get into a better environment, and planning was something that developed along the way?
So we run from stuff and to stuff. So yeah, I was running from being an employee, being in the cog, and just getting stuck and just not feeling like I could go anywhere. I was tired of climbing the corporate ladder. I wanted to build my own corporate ladder and have somebody else climb it, that type of stuff. So I wanted to be a CEO, but then also I did want to help people. I have that, again, missionary background and just, my parents and all that stuff. So I wanted to contribute, and just knowing that entrepreneurship is in my blood. It's in my lifeline. I want to be an entrepreneur, and being an employee. There are so many just instances where, I'm driving to work as an auditor, and I get to the client's residence or their business, and they're writing off their breakfast and their mileage and their cell phone, and I get maybe a little measly reimbursement for the mileage that I rode, that I had to drive my vehicle and all that time. But I wasn't able to write off my breakfast and my lunch and all this, like they could legally, ethically, morally. And I'm like, gosh, as an employee, it's costing me about 15 grand just to be an employee because of all the extra write-offs that I'm missing. And it's sad. And I had a side business, I'd get approval and all that other stuff to work at the IRS. And as long as it didn't conflict, you couldn't prepare tax returns and then audit and stuff like it. Just makes sense. So there's non-accountant related, but it's like, I need to help people. And I'd sit across the table from people I was auditing and with their accountants, CPA, attorneys. And I'm like, gosh, if they would have did this, they could have saved so much money. And their accountant just didn't say anything. And I felt like a preparer on the inside. And it broke my heart. And I wanted to genuinely help people.
Say that again. What did it do?
It broke my heart, man.
That's really important. And that's humanizing for a lot of people who think that auditors are cogs in a machine and automatons. No, it broke your heart. You knew that somebody could be doing better financially for themselves, and you had a fairly unique vantage point to judge that from, a very credible vantage point, and it broke your heart.
Yeah, it's just right. So I ran from that because I wanted to help, and then I knew that humanity was better. And then I joined your programs, and because you had the instant tax relief, and you continued to expand it into other greater things, Taxmaster Network, and just grow that and educate. And so you're an educator, and I want to be an educator. So I just couldn't reinvent the wheel. I'm like, why reinvent the wheel? It's got all this stuff. He's a genius guy. Let's just use and get the license and help more people. And so it's been a fun journey. Again, riffing off of, it's kind of like you're the lead bird, and you're cutting the wind and stuff and making room for other people. So I appreciate all that you've done as a leader, thought leader, and being creative and all the stuff that you're doing.
Thank you. It's building a community of people like yourself is what I'm most proud of in my career. My most valuable business asset is a network of hundreds of tax professionals and financial advisors across the country who listen to what I say and deliver the same value to their clients, and in some cases bring their best clients to me.
Wow.
So you're a lot more satisfied running your own shop as an entrepreneur. Tell me what it's like being on the other side. Is it really the dark side? Clearly it's not, given what you're saying, but was that a difficult transition at all, going from representing the government in a pretty adversarial environment to representing taxpayers in a much more open architecture?
Yeah, so I remember shortly after leaving the IRS, I represented a client. She was being audited. It was interesting because they dissolved the S corp. She's a realtor, and they dissolved the S corporation and took her back to a Schedule C and unwound several years of payroll and all. And we're going to fight it. What we ended up doing is doing a medical reimbursement arrangement. And we actually got a lot more money back because we put the husband on payroll.
Sure.
And in the tax savings that was going to be there, and that was before qualified business income, QBI, and all that stuff. But we ended up getting more money back from the medical reimbursement than we were from the tax savings.
From the S corp. Okay.
S corp. So, and then also what was weird is the IRS gave the client, the taxpayer, like an $87,000 tax bill. I'm like, this isn't right. It was AMT was all jacked up. AMT is very complicated, alternative minimum tax, which stands for AMT. So that was all messed up. I was like, this doesn't work. And then we brought in the medical reimbursement. IRS ended up cutting her a check for 18 grand. So it was about 100 grand.
That's
swing.
$100,000 swing.
So she was happy as clam to not have to owe that amount and then walk
Right.
away and get an 18 grand refund. And she's like, what did you do? It's like,
What
well,
dark
this-
magic did you wield behind a curtain somewhere to turn an $87,000 bill into a check for $18,000? So you are a card carrying hero at that point.
Totally, he is. And that must feel great. And you do something that most accountants don't, right?
Yeah, I hope so. I hope so that I'm not the average CPA, average accountant, right?
No, you're certainly not, because you have that proactive planning focus. So tell me a little bit about how planning has grown to play a bigger part in your firm and in your clientele.
Yeah, and it's planning is more of a lifestyle, a life cycle. I look at more of the tax code as not roadblocks, but actually a roadmap.
Mm-hmm.
The tax code is a roadmap to help us to take advantage of the incentives. A lot of times, accountants will say, spend to zero. Like, buy a new truck, buy equipment. Let's invest to zero. Let's have stuff let's buy a rental property. Let's do oil and gas. Let's do these things that are going to help you, that are going to build assets. And we
Right.
take the incentives, those credits, those deductions. I talk about, okay, if you have a $10,000 tax bill and you have a $10,000 credit, you pay zero tax. But if you're in the 30% tax bracket, you have a $10,000 deduction, that's $3,000. You still owe $7,000. The delta, the difference is $7,000. So credits are way more powerful than deductions. So let's
way
go
more
harvest.
Mm-hmm.
So it's the acres of diamonds saying, it's the, Russell Conwell, acres of diamonds. Let's look down.
Mm-hmm.
And usually it's the treasures. And so that's where Augusta rule, and I know Augusta rule is like oversold, but there's so many other things, cost eggs and all these other things, time value of money. And as
Right.
Albert Einstein talks about time value of money, those who know it, use it. Those who don't know it, get used by it. Same thing with IRS code. Those who know it, use
Right.
it. Those who don't know it, get used by it.
Yeah. The easy analogy I use for explaining the Internal Revenue Code is it's a series of red lights and green lights. The red lights are where you have to stop and pay tax. And there are very few red lights, but they're drawn very broadly. For example, Code Section 61 says gross income includes every dime that you get your picking fingers on, including the change in your couch cushion and the $5 bill that slides down between your car seat and the console. So everything is broadly defined as income. And there are a few more provisions, about a half a dozen provisions. That's all the red lights. But then there are hundreds of green lights. You mentioned one earlier, which is the medical expense reimbursement plan. The Augusta rule is a green light. Depreciation is a green light. All of these things that your clients are deducting, all of the things that you saw people deducting when you were as an auditor that you couldn't deduct, those are green lights. So most tax professionals focus on the red lights. That's important. Blowing through the red lights is what gets you in trouble. But there are very few tax professionals who spend time learning about the green lights and then, more importantly, take time with their clients to find the green lights. So you have someone who does, an accountant at the end of the year says, spend to zero, buy a $100,000 pickup truck to eliminate your last $100,000 of taxable income. But what about restructuring the business? What about restructuring it from a proprietorship to an S corporation to minimize employee tax? What about setting up a C corporation as a management company to peel off some income to be taxed at 21%? What about that medical expense reimbursement plan that you set up for your real estate agent client? And it's that structuring that we do long before the tax return ever gets filed. That's where the magic happens. And it's not dark magic. It's just understanding the green lights in the code and taking the time to look for the green lights. So when I ask a client, when's the last time your tax pro came to you with an idea to save money? What I'm really asking is, when's the last time they came to you with a green light? Instead of just saying red light, no, you can't do that, without offering an alternative way to get there.
Absolutely.
What have you found the most valuable source of green lights to be? You've done a lot of training, you've taken a lot of classes and gotten some certifications. I'm going to say you're a card carrying expert in this area. Where have you found the most green lights, and do you have a favorite green light?
Boy, I like the
We didn't
lazy
say this podcast would be easy.
I like the lazy 1031s.
Okay.
So a lot of people understand 1031 exchanges. So
Sure.
I'm going to trade one property for another and whatever. Well, is there an alternative? What if that doesn't work out? Is there another way? Yeah. And that's through accelerated depreciation, cost segregation. So we're breaking out the components. So we might sell one property and we might buy something else and do a cost segregation on that, or we transfer it into another investment property. Whatever. There's a lot of other options, and we're
Right.
taking
So what
that.
you're doing, what you're doing is you are selling the property outright and going ahead and recognizing the gain. You're skipping the actual 1031 step, but with a new property with aggressive but legal depreciation, you create a large amount of deductions to offset the gain from the original sale. Yeah, that's a smart strategy. And it's basic blocking and tackling, but we do it every day. My last call before this podcast was with a financial advisor in California who converted the garage of his house to an office and paid $100,000 to do it, but nobody ever told him that the $100,000 he spent on flooring and on lighting and on drywall all of that stuff was non-structural, so that he could write it off over 5 years. Well, he did it in 2019. That 5-year period has passed. And what I said was, look, I bet we can create an $80,000 deduction for you just doing a cost segregation on your driveway or on your garage. So the lazy 1031, by the way, that is not oversold. You mentioned that the Augusta rule is oversold. And I think what you mean by that is all of the influencers on social media who talk about tax talk about the Augusta. The Augusta rule, Neil, I think we may have touched on this on a previous podcast. It's the rule that says you can rent your house to your business for up to 14 days of tax-free income per year. So the business writes a check to you for rent for your home, and you simply don't have to pay tax on it. Now, there are guardrails. You've got to establish a reasonable rental value. You've got to document the business use of the property. It is a pretty cool strategy. And so it's sexy for an influencer to talk about the Augusta rule. But 14 days of rental income from your house, that's a nice savings, but it's not going to make you rich. Something like a lazy 1031 can eliminate hundreds of thousands of dollars of capital gains when you sell a property.
So there's a heads and a tail side of this story. So the head side is proactive and it's taking advantage of something and getting something. The tail side is avoiding. And so what's better, defense or offense, right? There's that old cliche, defense wins championships, offense wins games.
Offense sells tickets, defense wins championships. Yeah.
Exactly. So what's the defense here? The defense is phantom tax. The phantom tax is so underappreciated, undervalued, under talked about, and it's sad because the phantom tax in so many ways, but in the particular with real estate, because what happens when somebody doesn't do a cost segregation study, they take that roof off, they take that HVAC off or whatever, they throw it in the dump, but it's still on the books.
Right.
Now it's double.
It's a ghost asset.
It's a ghost. So one is you're getting hit because there was a useful life on the books for that particular asset that didn't get removed. So you're missing out on that additional savings.
Neil, you're looking a little confused, so I'm going to jump in.
Yes.
You're confused. Listeners are probably confused.
Yes.
So let's say I buy a rental property and that it's a rental house. It depreciates over 27 and a half years. 5 years into owning that property, I need to replace the roof. So what happens to the old roof? We tear it off, we throw it into the dump, we put on a new roof, and we start depreciating the new roof over 27 and a half years. but we are still depreciating the old roof as part of the house. With a cost segregation study, you break the house into component pieces. So there's the foundation, there's the roof, there's the windows. If we replace the windows with replacement windows, we throw out the old windows. So the ghost asset is, I've owned the property for 5 years. I'm going to continue depreciating the old roof for 22 and a half years, even though I've thrown it away. Well,
Right.
what a cost segregation study lets me do is say, okay, the value of the old roof when I bought the house was $10,000. I've depreciated it over 5 years. I've got $9,000 worth of depreciable basis left. I throw it away. I can deduct that $9,000. But most people don't do that. Most accountants don't do that. They don't have a separate breakout for the value of the roof. So the taxpayer continues to get a deduction for the old roof when they could have gotten a deduction all at once.
Okay.
So that's hit number one.
Mhm.
Hit number two is that you have to recapture that old roof and the new roof when you sell it. So you're getting hit twice there.
Right.
Hit number three is the time value of money. What could you have done with that money to reinvest into another asset that produces income?
Right. Yep.
So there's this opportunity cost. So there's a triple hit in the phantom when it comes in. And that's why it's so frustrating, so destructive. And I get sad.
It is frustrating. So the financial advisor who I was talking with, who turned his garage into an office, this guy has millions of dollars worth of property, and I looked at the depreciation schedules for these properties, and they didn't have cost segregation. They had not broken out the personal property in multiple $1 million apartment complexes. So it was, I don't know if it was laziness or ignorance or just not having enough time, but these were, his tax return is over 400 pages. And you would think that a 400, Neil, you're probably just clenching up hearing that somebody has a 400-page tax return. Yet with all of the effort going into preparing a 400-page tax return, nobody ever sat down and said, hey, wait a minute, we could be taking much bigger depreciation deductions on this property by moving them up. So yeah, you would still get depreciation over time, but $1 of deduction today is worth a heck of a lot more than $1 of deduction 25 years down the road. And these are the sorts of things that proactive planners do every day under the surface, because most property owners don't know what cost segregation is. They wouldn't understand a phantom asset if the roof fell on top of them. They wouldn't understand the concept. So it's an educational process, and it's a detailed work product to get there.
Yeah.
This is the point where I tell my clients, now you know why tax lawyers drive Jaguars.
Because you're figuring out things that
Right.
I would not be able to figure out.
Well, but you wouldn't look at, and TurboTax is going to ask you to enter the basis for the structure, but it's not going to tell you, now you should do a cost segregation study. You could get a separate basis for the windows, for the roof, for the HVAC system. And by the way, you can get faster depreciation on a separate schedule for the appliances in the kitchen and the carpet in the bedrooms and the wiring in the walls. And by the way, the land is not depreciable, but what about the driveway? What about the landscaping? What about the sidewalk? Those are land improvements that depreciate over 15 years. You need somebody who's got expertise and who's going to do the work, but the work is worth it.
So, I mean, hearing what you guys are saying and just kind of summarize, I mean, it's important to have the right person in your corner that understands all this stuff and is looking to save you money, because they could just go and say, by the way, or we're just going to just run through this tax return and be done. And they'll never know.
And in most cases, the client's never going to know. The client, the owner of the property or the business owner, is never going to know. And that breaks my heart. I've spent 20 years working to help clients understand that there are things they can do that the tax industrial complex is not showing them that they can do, with rare exceptions. And David, you are a prime example of that rare exception. So, David, you're not an old man. You've got a lot of years ahead of you in your career. Where do you see your career going? Where do you want to head? What direction do you want to take your practice in so that you can be as valuable as possible for your clients?
Again, I'm under the belief that the people who know how to use AI are the people that are going to replace the jobs, right? It's not AI is going to replace jobs. It's people who know how to. There will be lesser jobs, but just as you mentioned earlier in a call, there was the technicians, ultrasound people, right?
The
So it's like radiologists, they were going to be replaced, but now they're spending more time with people.
Right.
That people,
AI is largely pattern recognition, and radiology reading the scans is something that lends itself to pattern recognition. So radiologists were predicted to be the first specialty that would be replaced by AI. Well, it turns out that AI, while it is very good at pattern recognition, it's not as good as at reading scans as actual people who have been trained, and they still need the radiologist to interpret the results for the patient.
Yeah.
And so the business is shifting from the reading of the scans to communicating the consequences of the scans to the patient. This is part of the reason why I don't worry that AI is ever going to replace me. AI may learn to sit down and read a tax return and make some suggestions, but then some real person is going to have to prioritize the suggestions, have the discussion with the client, figure out which of the suggestions are most appropriate with the client, prioritize those suggestions, and then manage the workflow that goes into it. And Neil, you've just touching on the workflow that goes into a cost segregation study on real estate. That's not something that a large language model is ready to replace yet.
I'll explain that the only way, Ed, you get replaced is somebody as talented as you uses AI as another part of it and becomes a master of AI, then they will replace you. But there has to be a human controlling it. It's like driving a car. You'll have driverless cars, but you still have to have a human make sure while the driverless car is happening that they don't make a stupid mistake. Oh, I'm about to wreck. I better go back to drive. You're never going to have a situation where you're going to go in the back seat and say, okay, driverless car, drive.
Your Tesla will drive, but your Tesla is going to monitor that you have your eyes on the road and your hands on the wheel. And within those guardrails, the Tesla will drive itself, and that is a wonderful thing. The other thing that I draw comfort from, and David, you probably do too, is that the higher you move up the financial food chain, the more people want humans working with them and for them. So robo-advisors may help you manage an investment portfolio if you're very hands-off. But somebody who's making $1 million a year wants a hands-on human being holding their hand through the process. And as I work my way up the financial food chain to the point where most of my clients earn $1 million a year or more, some of them are earning more than $10 million a year, they want service. They want a human being. They understand that they can afford more than a computer doing the work for them. And so there's going to be a role for those of us who work in those advanced markets.
I agree. And I think that, but like I said, staying ahead of the game, Ed, and AI and technology will make you unstoppable and probably beat your competition that's younger than you that's trying to come up the ladder.
Well, I'm 61, but I can still learn how to use AI too.
Right.
There's no road.
So you're 85 or 105 or 10, with our longevity, who knows? So
there's somebody out there who's 85 years old who knows more about taxes than me and knows more about AI than me. And I'm not threatened by that.
No.
All right. Well, David, thanks for your time today. Tell us a little bit about your practice and how people can get in touch with you.
Yeah. So Anvil Tax, ANVIL Tax, TX, producing videos and doing these types of education. I want to educate. I want to motivate. I want to develop these systems for people because systems are where it's at, right? People are unmanageable. Get back to Michael Gerber, as he talked about, you can't manage people, so you set up systems to manage people. And I'm using AI tools to help people to set up the accounting systems because it's less humans that are actually reconciling and doing the double checks. But we got to set it up. We got to make sure it's monitored. and then reading the data and say, where are we going? Looking at those key performance indicators and whatnot. And how do we avoid flags? How do we avoid the troubles? And then as people have more money and less time, they want somebody to go and find the deals for them. They want them to go shopping, right? They don't want to go to the store. They don't want to go shop for the best, cheapest insurance or whatever. They want somebody to go do that for them. Yeah. And that's where a family office director model comes into play. So using these models, creating these systems, managing these systems, finding the best deal, like shopping at Costco, having it delivered, but making sure we're getting the best deal.
Mm-hmm. Okay.
That's what I'm doing.
Right. AnvilTax.com to find David Tuck. Thanks for your time today. This is a terrific discussion. We're going to want to have you back.
Yes.
Outstanding. Thank you. Thank you.
All right.
All right. And Ed, we could just check him out by going and make sure you follow and like and share the Lion's Share podcast. Appreciate it, Ed. Thanks again. That was a special simulcast of the Neil Haley Show and the Lion's Share podcast, guys. Take care.